hey man, you got a 10x it. What? You only hit 115 on squat rack? Bro, 10x it, man. Make it 1,000. Make it 1,100, bro. Who cares if you die? You got a 10x it, bro. Yeah. Hey guys, what's going on? Didn't see you there. My name is Daniel Kwak. Excuse the cheesy intro because I like to be funny occasionally, and I know how it gets when you're watching these videos, right? You get bored. You're probably watching this in your car right now and you can't even see the screen. Well, if that's you, then that's okay because I do the same thing too. And in this video, we're going to talk about why I disagree with Grant Cardone when he's telling everybody to do syndication. So let's go ahead and cue that intro and let's get right to it. Alright guys, welcome. This is Daniel, one half of the Kwak brothers. And guys, listen, you know, as much as I love Grant Cardone, as much as I loved his books, and as much as I loved his videos on YouTube, there is something that I would respectfully disagree with Grant in terms of what he said the last couple years to telling everybody to do. And well, what has he been telling everybody to do? Well, you know, the last 2 years, you know, I keep my eye out in the real estate investing world and what other people are doing. And I've been hearing a lot from other people that Grant Cardone is telling everybody to do what's called a real estate investing syndication. Now, what a real estate investing syndication is, it's either a 506B or a 506C according to your law in terms of how companies get structured, in terms of entity formations, et cetera, But long story short, it's pretty much when you get a bunch of people, you pool their money together and you pretty much raise the equity or the debt to be able to buy a larger asset. So you, as a syndication manager or a syndicator, you're pooling a lot of money together to buy an asset. At the end of the day, that's pretty much what you're doing. Now, a 506B or a 506C paperwork may take a lot longer than a simple LLC creation. But let's talk about why I respectfully disagree, and let's talk about how to raise money as a beginner. Because guys, let's be real. Can we have a moment of honesty here? Like, let's have a friend-to-friend talk. Let's imagine here that there's a little fireplace, right, between me and you. And there's marshmallows and there's chocolate, you know, and there's strawberries, and, you know, it's a very nice, intimate moment. And let's say we're just talking, right? We're in my backyard and, you know, we're talking and you're asking me about real estate investing, right? 90% of you watching this video probably either have not done a deal yet, or you haven't done, you know, or you haven't done too many deals, right? Maybe you did 1 or 2, 3 here and there, right? But let's be real, if you're watching this video, you're probably not a multi-million-dollar real estate investor, right? At least by chance, probability speaking, 90% of you probably not there yet. Right? So that's the part where I get a little disturbed at what Grant Cardone is telling people to do. At the end of the day, what are syndications? Well, like I explained before, if you're pulling a lot of more money together, number one, you're increasing your chance of liability. Right? You're increasing your chance of liability by bringing on more partners in smaller increments. And guys, let me tell you my personal experience. I've been doing real estate now for about 5-6 years, and you know, at the age that I'm at, I'm doing decent, right? Now, guys, 100%, you're gonna hear it here first. I'm not as successful as Grant Cardone, right? I don't think that's a secret. Grant Cardone owns a ton more real estate than I do, right? But I also own a real estate investing education company. And I've heard a lot of my students say, well, Daniel, I want to do a syndication. And I'm like, why? What I'm hearing is that you're not taking the time to master this craft and build your team. And we've got a lot of people out there that are doing syndications, even despite not having taken the time to master this craft and to build a team. And that's nothing against you guys or anybody trying to do syndications. I think I speak for myself and you and a lot of other people when I say that at the end of the day, we're just trying to put food on the table for our family. We're trying to build a legacy. We're trying to get that passive income, and we're trying to create an empire, right? So there's nothing wrong with that, right? There's nothing wrong with that whatsoever. And third reason is, well, if everybody is doing syndications, because guys, Grant Cardone's a large figure, right? He's a very popular individual, and you know, he's kind of taken over this real estate investing world in terms of what's popular, what's not, right? He's right up there with the best. And what worries me is that when everybody is doing syndications, and at the same time, you've got a lot of foreign buyers, and at the same time, you got a history and a moment in the United States economy where the money is so cheap because of the low rates, because of what's going on in monetary policy. Well, what does that do to your real estate investing multifamily market? It changes a lot. It raises up the price, it raises up the value, and it puts us in a position where we're headed towards a bubble. It puts us in a position where it's an oversupply of capital, right? I was reading an article this morning. Multifamily has gone up from 15.6% to now it's like closer to 30%. And guys, that's a scary thing when you have that big of a jump. Going into apartment complexes, going into multifamily buildings, that's not a good thing. It raises the price, and that's part of the reason why I haven't done a multifamily deal in 2 years, because I've actually respectfully held off because I saw the amount of competition happening in the marketplace. The last apartment building I bought, guys, was a 24-unit building, and I had to compete against 16 other offers. Now, granted, I still got the deal because I was able to provide some value to the seller that not a lot of other buyers could provide, because I asked questions and I actually got the time to get to know the seller and his or her problems. I was able to get the deal. But I think you guys get my point in terms of there's an oversupply, there's a very high competition market for multifamily and apartment buildings, which 99% of the time, if you're putting together a syndication like Grant Cardone is telling you to do, those are the type of properties and assets that you're going to go after. Another reason is that typically syndications happen with individuals who have already done a good number of deals, right? A good friend of mine, Joe Fairless, which if you guys want to check out his channel, go feel free to do so. He's done a lot of different real estate deals before ever doing his first large syndication. And he's kind of taken the right path of educating himself and doing a bunch of smaller deals first and making sure he's got the team before doing something like a large real estate investing syndication deal. And a lot of people just get romantic and they get starry-eyed with doing a 5, 10, 15, and I've heard an individual who's never done a deal before go after a $56 million syndication deal. And guys, at the end of the day, let's think about what's going on from either end. Number one, you're putting yourself in a position where if you make a mistake, because guys, it will happen, right? I've done a lot of real estate deals in the past. Mistakes will happen. You're putting yourself in a position where those mistakes are going to cost you so much more as compared to learning the same mistake but doing it at a smaller scale first to where you're not destroying yourself. And let's look at the other end of the spectrum, the people investing into your syndications. They're investing their money with somebody who doesn't have a whole lot of experience, but because everything seems great, they're going to invest their money anyways. Well, you're putting them in a position where their risk is significantly higher, right? Because of the individual actually doing the deal. And at the end of the day, guys, what I've learned is the property doesn't matter as much as the person in the driver's seat. Like that person matters so much more. Their level of competency and knowledge and team building and their business planning, it matters so much more than what the property actually performs as. And as much as you guys may scratch your head when I say this, I would much rather buy a property at 5% cap rate, but have a phenomenal business plan and a phenomenal team to execute it than buy a property at 10% cap rate and also, have a horrible team, no business plan. I just buy it because it looks good. 100%, guys. So let me share with you guys some techniques on how to raise money as a beginner. Well, there's a lot of books that I've read in the beginning of my career that have really helped me raise money and help me study. So number one thing I would recommend people do is partner with somebody that is already experienced and be the person bringing the money. To somebody who's already experienced in real estate, that's something that's very valuable to them, right? An individual who has raised a couple million or something like that, right? Has raised money and they're able to introduce the investors together and whatnot. Guys, that's really, really helpful. Now, obviously, you want this experienced individual to actually know what they're doing, but also have really high integrity. So this is where talking to other individuals about that person is going to help a lot. And also another thing, go to as much meetups as you possibly can and ask the question, what's the number one problem I can help solve for you in real estate? Guys, that's actually how I first raised money, quote unquote, is I would go to a lot of different networking events. I would go to a lot of events in general. And I got in the habit of asking people, hey, how can I help you with your business right now? And eventually, as I began to have more and more conversations, I started having people say, well, I've got a lot of capital right now, and I want to invest it into real estate. I just don't know how, right? And I would set up one-on-one meetings with these individuals, and I would ask questions and get more in depth on what they were exactly looking to do with that capital. I say, hey, how can I be of service to you, right? Instead of thinking about you and yourself, try making it about other people and their needs, right? At the end of the day, that's what entrepreneurs and business owners do. They make it about them, about other people instead of themselves, right? Even the best entrepreneurs, they create a product or a service that serves everybody. So that's what I do, guys. I go to these networking events, and if I'm a beginner and I were to start off all over again, and I didn't know any of my investors, that's what I would do. I would go to networking events, ask, how can I add value to them? I would partner with somebody who has already done a lot of deals, who has experience, and provide the value of bringing the cash flow, of bringing, the capital, not cash flow, right? You can bring that too, I guess, in some ways, but bringing the capital. All right, that's going to put you in a position where you're actually able to learn how to do deals by actually doing it, by being a partner, and by seeing real life scenarios. And for me, guys, that's personally how I got started in the world of real estate investing. And so that's what I recommend to you guys. So again, nothing against Grant Cardone. I'm sure he means well, but that's just what I would have to respectfully disagree with in terms of what he's telling everybody to do. So again, guys, hope you enjoyed this video. Give us a thumbs up, guys. It would really help. And guys, let's imagine that for every thumbs up this video gets, that's how many millions of dollars you're gonna make this year. You guys like that cheesy line? But thanks again, guys, for watching this video. I'll see you guys in the next one.